Well, the new NFIB Small Business Optimism Survey is out today, and we're going to take a look at it here. Has been the trend that we have had a surge in optimism since the Trump administration, since Trump was elected back in November. However, there is starting to be a bit of a paradox between what would be considered the hard and the soft numbers, and we'll take a look at those so you understand. But there is still optimism. However, there is cautiousness in the small business world. We're going to take a look at that. Again, for those that don't know, I'm a business coach that works out of West Michigan and around the country, help businesses grow faster and ever thought possible. And I hope to earn your subscription today. We're going to talk about some stuff here. NFIB survey. It's one of my favorite surveys. Comes out monthly. Again, links to this is going to be in the description. Be sure to check that out. And again, for those that don't know, the NFIB is the National Federation of Independent Business Owners, and they go out and they survey small businesses on a consistent basis to see what they're dealing with the jobs and the overall market and just how things are. And we on this channel, we come and try to take a look at this on a consistent basis because I'll tell you, this is a great way to hear exactly what's going on, unfiltered from what you may get from the rest of the corporate media and things of that nature. Okay. There's going to be a spin everywhere. So with that, again, I'm still on the back end of this cold, so I apologize if I'm a little nasally, sound like Snuffleupagus here, but we're going to get through this today. So from February 11th, by the way, it's my mom's birthday. So happy birthday, Mom. Appreciate it. She watches the videos all the time. Now, small business owners report few skilled applicants in January for their open positions. That's the headline piece there. Again, the optimism index fell. We're going to look at some charts, by the way, here. This isn't going to be all reading. I want to show you the charts so we can really dig into them so you can better understand this stuff here. So we have the optimism index. It fell by 2.3 points in January to 102.8. This is the third consecutive month above the 51-year average of 98. The uncertainty index rose 14 points to 100, third highest recorded reading after 2 months of decline. So here's the deal. Prior to the election, the optimism index was in the tank. It was, and we're going to look at the charts here in a second. It was terrible. During the Biden administration, everything was just, boo-hoo. Everything is terrible. No optimism. Trump came in, shot through the roof, and now things are starting to regress back to the mean, right? Anybody knows what I'm talking about? There's always regression back to the mean. Same thing here where they got the uncertainty index. It declined, right? Because everybody felt certain what was going to happen, and now it's regressing back up again because there's a lot of uncertainty out there. It's very clear in the markets. Now, this is from chief economist, our favorite, Bill Dunkelberg. Overall, small business owners remain optimistic regarding future business conditions, but uncertainty is on the rise. Hiring challenges continue to frustrate mainstream owners as they struggle to find qualified workers to fill their many positions. That is a struggle that is not going to go away for a very long time. Meanwhile, this is important. Big sirens on this one, folks. Meanwhile, fewer planned capital investments as they prepare for the months ahead. We're in springtime. This is the time, usually it's in the late fall, winter, I say late winter, this time frame where the capital investment budgeting has already been planned for, right? You've done your budget, you're there for the year. And what they're saying is they're not going to be spending money this year. So they're building a cash stockpile. The people are concerned right now. And one of two things will happen here, folks. We're going to get into the charts here, but here's what I want you to keep in mind. We are going to have this issue occur where, let's say things go bad. Just let's say there's a recession that happens, and all these people sat on that cash, and they're going to be able to keep their folks employed. They're going to be able to keep their businesses afloat. That's what they're doing. That's one scenario, and when you have a lot of people planning for that, what that does is it naturally tends to bring on a recession because no one's spending money, right? It's a self-fulfilling prophecy. But the other side of this is when businesses aren't spending money and the recession doesn't happen, all of a sudden you're going to have all of this capital pouring into the economy all at once because they don't want to miss out on sales and things of that nature, which is going to drive a massive spike in inflation. Okay. When I see that business owners are not spending money, this is the biggest concern that I have is like, oh crap, because business owners, they tend to think as a herd. All right. Bill, Mike, Sally, and Alice, we're all kind of in agreement. We're not going to spend money. Oh no, business just showed up. Now we're all spending money, finite resources, inflation goes up, all of our prices go up. So just understand, like, this is my big worry right now, is that if we don't actually go through any sort of recession, which there's no guarantee like that's going to happen, even though that's what a lot of business owners are scared about. All it's going to mean is our prices are going to go through the roof this summer, into spring and the summer. So just FYI. All right. Key findings include the net percent of owners expecting the economy to improve fell 5 points from December to a net 47%. 18% of owners reported that inflation was their single most important problem. Move this over a little bit. There we go. That looks better. So 18% owners, inflation was their single most important problem. Down 2 points. It's getting ready to go back up because we're going to see the CPI this week is going to go up. And it was matching labor quality as the top issue. What they mean by labor quality is they cannot find the right skill set match for the jobs that they need. Net percent of owners raising the average selling prices fell 2%, right? They are having to lower prices. And if you understand what that means, that's also not good. It means purchasing isn't happening. Seasonally adjusted, a net 26% planned price hikes in January, down 2 points. So less people are raising prices, which again means sales aren't happening. 20% seasonally adjusted planned capital outlays in the next 6 months, which is down 7 points. 7. That's like 30% down. That's insane. And then net 3% reported their last loan was harder to get than previous. Okay, no loans are it's getting a little tighter out there, but they will still be loaning. Don't need to worry about that. Okay. Then let's see here. A net 0% planned inventory investments, whatever. All right, let's take a look at the charts, man. That's what I want to look at. Let's go. I want to look at charts. Here's charts. Okay, so this is the overview of the Small Business Optimism Index Survey. Check this thing out. Now we're going to live over in this area right over here. And can anybody tell when President Trump was elected? Just curious. Yeah, right here. It shot up, but you'll see at the end here, this little spot that I'm highlighting, there is a drop that's occurring. And that's reversion back to the mean. Okay, so we should be living somewhere around this historical average, somewhere here. Like, this is normal, right? That's where we should be living at. So expect us to get back into this box and hang out here over the coming time. So that's a good thing. It means people are getting back to, reality. All right. So here's the components, and this is the part where I was talking about ahead of time. So this chart has two different pieces if you haven't seen it before, and it's an important chart. So we have the hard problems, which is going to be in the darker black line here. So when you kind of see up at the top here around, job creation plans, job openings, inventory plans, earnings, capital expenditure plans. So those are hard. That means money is being spent. The capital is being invested. That's why they're called hard. This is so when people are making investment decisions and they're optimistic, that's when they're going to say, yes, we will spend the money. So that's what you're seeing with the hard piece here, where that has always been kind of in a spot. It's the soft expectations is where you get the animal spirits kick in, which is expected business conditions, outlook for expansion, expected real sales, expected credit conditions, and inventory satisfaction. So all of this means is during this bump from the Trump administration, like you can see, we were just on this in this area. If you take away this part just down to here, we have been on a net downturn. It's been going here during the Biden administration it's been for a long time, to be quite honest. We had a double top and it hit here, but you can see starting in this area here, COVID and everything just was a gut punch here. Okay. Like we had this little uptick, which was great. We were all juiced, but in reality set in here. Now we're back up in this area. And again, historically, we should be hanging right around here. So again, all we're doing is getting back to what the historical norms would be here. Okay. Where people are able to, hey, we think things are going to be all right. There's not super elevated or also not super declined. Okay. That's all that's happening. Now here's the, the uncertainty index, which is the I don't know and uncertain of answers. And it's a lot of the questions that they have here. Okay. And you see this has significantly spiked over the last few years. We should be hovering somewhere right around here's where, let me do that again. So gotta love live video, folks. All right, right about here. This is where we should be living at, this little area. So we've got a way to come down. So there is a lot of uncertainty going on here. We thought there was a drop, as you can see, this little spike here. or it dropped down when Trump came out. But guess what? Everything's coming back because he used the word tariff. Oh no, right? So he used the word tariff, which caused some issues for some folks. Oh, go away. I don't want to put any notes. Okay. All right. And then lastly, here's going to be we got a couple more things here. The good time to expand business outlook. You can see everything's skyrocketing, but it's going to start coming back down to coming right back to where it should be, right? This is where we want to be at. So we're right back where we should be, where folks are like, hey, I'm willing to give it a try. Even with interest rates where they're at, folks are willing to do it. I'm not worried about the earnings piece. That's always going to be down this time. But here, this is what I'm talking about. This is where we're in some irrationality. And we are in some doom and gloom. But you can look in this area right here. I'll highlight it. So right here, this is like the sales piece where we were irrationally just saying things are going down. But we got into the interest rate cycle, which did this piece. But can you see where President Trump possibly was elected? That's what I'm saying. We're working through some stuff here, folks. And don't worry about prices. Where's the employment? Here's what I want to see. So here's the employment piece here. All right. So we had actual job openings have been dropping again. They've been going down. And then, but what we have seen here is starting when President Trump got elected, we planned on having more job openings. You can see it right here. This is from 2020, the big, huge, nasty, but we got down here, we're dropping. Folks, what I want you to look at here is, see how these tend to work in tandem? See how as we go along, everything is just kind of here where we got job openings and there's plans. It's because we're working on filling some gaps here. Look at the size of this gap compared to, well, hell, any other gap out there. But let's just say this gap right here. And this is the concern that I have and all my employers have, and frankly, where you are at, and as employers, as a business owner, or whatever, that gap has to close. Like, that's super important that that thing eventually closes up, because what that means is we have a complete misalignment of the jobs that are out there currently versus the jobs that are needed. And business owners can't even fill the ones that they currently have. They're not going to be actively adding to more jobs out there because the pool just doesn't exist for the people that they need. And I'm trying to think the last time that I would even say that this is a similar thing, just looking at the numbers here. Actually, here's a good spot. I think we can go back. Let me go back to it here and show you. The best closest analog is going to be this spot right here, which is when we were coming down off of the tech bubble. There's a nice little gap there. It's not where big as this thing, but we have the tech bubble that occurred back in the dot-com bubble, excuse me, that occurred. All right. Anyways, got a little bit more to say, but yeah, go to the, be sure to go check out the website. Links in the description here for sure. But so that took the better part of almost 4 years to work out. It's going to take us, my guess, just to be brutally honest, it's probably going to be a 10-year solution before we're able to close this skills gap for employment. I really do. I think there's way too many BS jobs that are still out there. If you're in one, you know what I'm talking about. If you're not, if you don't know what I'm talking about, just look around. You can see them. Go to LinkedIn, see who's at going to conferences and posting selfies and parties out there. You'll know what I'm talking about. So we got to work through all those. Once those are gone, then we can start getting back to where we were closing the skills gap appropriately. So with this is the NFIB survey. I look at this all the time. Again, I appreciate y'all, whoever hung out this long. Thanks for hanging out this long. Hopefully I earned your subscription. Man, I got to get over this cold, folks. Take care, guys. We'll see you later.